All right, let's dive in. Today we're pulling back the curtain on SAP FICO. You know, it's basically the financial backbone for so many of the world's biggest companies. We're going to break down how this powerful engine actually works, piece by piece.
So it really all boils down to this one huge question. I mean, think about it. How do these massive global companies, we're talking dozens of countries, different currencies, countless subsidiaries, how on earth do they manage all of their finances at the same time without it all turning into complete chaos? Well, the answer is a superstructured system, and that system is SAP FICO.
Okay, so here's our game plan for today. We're going to start with the absolute basics, the enterprise structure. Then we'll get into the general ledger, talk about the rules for handling transactions, get a quick intro to controlling, and finish up with a really cool feature called document splitting. Let's get to it. All right, first up, Enterprise Structure 101. You can think of this as the blueprint for the entire business inside SAP. And believe me, getting this foundation right is absolutely critical. So this is the first big concept you have to wrap your head around. You've got the group company and the company code. Think of the group company as the main headquarters, right? It's the parent. It doesn't do any day-to-day business. It just consolidates all the numbers for those big high-level reports. But the company code, that's where the action is. That's the actual legal company, the subsidiary on the ground, making sales, paying bills, every single financial transaction. It happens right there, at the company code level.
And this quote really nails it. It's saying, look, all the real business, all the transactions, they happen at the subsidiary level. So it just makes sense, right? The bank accounts, the sales accounts, everything has to live there too, inside that company code. Okay, so we've got our structure set up. Now, where do we actually keep track of all the money? Well, that brings us to the financial heart of the company, the general ledger. But before we can even think about the general ledger, we need something called a chart of accounts. What is it? Honestly, just think of it as a master list or a menu of every single financial account the company is allowed to use. It's the blueprint that lays out all the categories: cash, sales, expenses, you name it. You can't just make up an account, it has to be on this list. So how do you actually create one of these accounts? Well, you'd use a transaction code like FS00 in SAP to get to a screen like this. But don't worry about the code. Let's focus on the idea behind it, which is actually pretty clever. Creating an account is a two-step process. First, you define it for the whole group at the chart of accounts level. This is where you say, hey, this account is for cash, and cash is a balance sheet item. That rule applies everywhere in every country. Then, step 2, you add the specific details for each company code. This is where you say, okay, for our US company, this cash account will use US dollars, but for the German company, it'll use euros. See how that works? One universal rule with local details layered on top. That separation is what makes SAP so powerful for global businesses.
Okay, structure's built, accounts are ready. Now for the really important part, the rules. When it comes to finance, you need to trust the numbers, right? So SAP has some very strict rules to keep the books clean and accurate. And this is probably the biggest rule of all. In SAP, there is no delete button. Let me say that again. You cannot delete a financial transaction once it's posted. It's just not possible. Made a mistake? Too bad. You can't just erase it. What you have to do is post another transaction that's the exact opposite to cancel it out. Why? It's all about the audit trail. This way, there's a permanent record of everything that ever happened, the original mistake and the correction. Auditors love this.
And to take that a step further, look at this list. Once a transaction is in the system, these key pieces of information are locked down forever. You can't change the company code, the currency, the amount, the accounts, or the date. Think about it. If you could, the whole system would be useless. You could never trust the reports. So yeah, you can maybe fix a typo in the description field, but the core financial data, it's set in stone. And that's not a bug, that is 100% a feature.
Okay, so everything we've talked about so far has been about financial accounting. That's the FI in FICO. It's all about reporting to the outside world. Now, let's switch gears and talk about the CO part, controlling. This is all about looking inward.
And the main hub for controlling is something called the controlling area. This is basically a management sandbox. It's where managers get to play with the numbers to figure things out. How much is our department spending? Is this product actually profitable? Are we over budget? All those internal questions get answered here.
So let's really spell out the difference here. Financial accounting, FI, is for the outside world. It's for shareholders, the government, the tax man. It has to follow strict legal accounting standards. It's not optional. But controlling, CO, that's for the inside world. It's for the managers, The rules are whatever the company decides they need to be to make better decisions. One is about legal compliance, the other is about strategic insight.
All right, let's dive into our last topic, and this one is a really powerful one. It's a feature called document splitting. I'm calling it the Smart Ledger because it lets you get incredibly detailed, almost magical financial reports.
So what is it? In a nutshell, document splitting is an automatic process that solves a huge headache in accounting. It takes one single transaction and intelligently splits it up behind the scenes. The whole point is to make sure that you can create a perfectly balanced financial statement for a really small part of the business, like a single department or product line, which we call a profit center.
Okay, let's make this real. Look at this example of a transaction before document splitting is turned on. We have a sale. You can see the revenue lines are split nicely between two different profit centers, PC1 and PC2. Great. But look at the customer line and the tax line. They're blank. There's no profit center assigned. So if you're the manager of PC1 and you try to run a report, your books won't balance. It's a mess.
Now, check this out. This is the same transaction after document splitting is activated. Look what SAP did. It automatically, in the background, split the customer and the tax lines. It used the same logic as the revenue split. So now you can see PC_1 has its own customer and tax amounts, and PC_2 has its own. Each profit center is now a complete, self-contained, and perfectly balanced transaction. It's brilliant.
So what's the big deal? Why does this even matter? Because of this feature, a company can now generate a complete, balanced balance sheet for every single profit center. This is huge. It means the manager of, say, the smartphone division can see exactly how their part of the business is performing, as if it were its own separate company. You can measure profitability, hold people accountable, and make incredibly smart decisions about where to invest your money. It is an absolute game changer.
All right, let's do a super quick recap of what we covered. 1. The enterprise structure is your foundation. Group company for the big picture, company code for the real work. 2. The chart of accounts is your master list for all your accounts. 3. You never delete, you always reverse. 4. Controlling, or CO, is for internal decision-making. And 5. Document splitting is the magic that lets you get balanced reports for every single part of the business.
Now, obviously, we've only just scratched the surface here, but hopefully you now have a feel for the incredibly powerful and logical structure behind all of this, which leaves us with a final question to think about. Now that you see how this system provides such detailed, real-time data, how could a company use that information to drive its biggest, most important strategic decisions? Something to chew on. Thanks so much for joining me on this deep dive.